All right, for more on how the markets are moving this morning, we're joined by Eddie Gabor. He's a co-owner at the Key Advisors Group. Eddie, it's good to see you this morning. You know, the big question is stimulus. Are we going to get it before the end of the year? Likely yes, but what exactly will it look like? We do know Mitch McConnell, the Senate Majority Leader, is still trying to hold his ground for a smaller stimulus bill than what the House Democrats have proposed. What's your expectation?
You know, we do expect something to pass next week. This is probably the closest we've actually been to a deal coming through. And I think we're going to be seeing a $900 billion deal, so much smaller than originally thought a few months ago. But hopefully, our hope is that the stimulus is targeted for those that need it the most. There are a lot of people suffering right now, families and businesses that have been really hit hard with this shutdown, and they cannot afford to wait till January or February. So I hope these politicians will move forward and get something, because something is going to be better than nothing at this point.
So your expectation is that Mitch McConnell, the Senate Majority Leader, will eventually appease the Democrats. We do know this $900 billion draft is a bipartisan draft of legislation. But again, according to reports, Mitch McConnell is still trying to hold his ground for just a $500 billion package.
Yes, I think that they're going to have to compromise and come up above that 500, and I'm hopeful that it's going to be closer to the $900 billion deal. And again, I continue to emphasize that I hope it's targeted to those that need it the most, because these businesses are suffering that have been shut down.
Let's talk more about the pathway of the market into year-end. Always questions around this time as to whether or not we will see selling simply as investors reallocate their portfolios ahead of the new year. What's your expectation?
I think we're going to have the Santa Claus rally that many investors were hoping for. I think people got a little bit skittish because of how big November was. But when you look at what the market is telling you right now, with all of this negative stuff happening with the virus, with stimulus, we still have the VIX very tame, the 10 years very tame. We're not seeing tremendous downside on the markets. The market does not want to go down right now. So I expect this stimulus bill to pass next week, and that will be the jolt that we need to get us to finish the year strong. And I think we'll be higher than where we are today at the end of this month.
By that, how much? That's always the golden question, Eddie. And then I want to get your take for next year as well. We're already seeing the projections come in for how some of these big banks and institutions expect the stock market will play out in 2021, knowing that there is a light at the end of the tunnel via vaccine. What's your expectation?
So I think we could see another 3% to the upside here before the end of the year from the levels that we are now. I'm expecting 2021 to be a very big year for the cyclical stocks. They, in our opinion, are going to be the big winners as we look forward to the pent-up demand that the consumer has. We think that the second half of next year, we'll see some of the strongest spending on travel and entertainment in the history of this country. So it's not real popular trade to be buying the recovery stocks and the cyclicals, but for those willing to take that risk, I think there's tremendous upside there in those spaces, and energy is included in that.
How do you look at this divide that still happens, Eddie, between Main Street and Wall Street, knowing that if we get another stimulus bill, those $1,200 checks to Americans will not be part of it before year end? I mean, it sounds like obviously you're very bullish on the stock market, but how do we factor in Main Street? Is it just not a factor at all anymore?
Well, there is a disconnect there. Make no mistake about it. The stock market is not the economy. Look, the overall economy, we are recovering. We know that. And we've come a lot farther than many people anticipated, myself included, when you look at the labor market, how quick that snapped back. But the bottom line is there's still a big, large amount of people that are not having prosperous times right now. And that's very unfortunate. So the reality is that the stock market is completely different than the economy. And that's been proven true this year as we've seen stocks hit all-time highs while the economy continues to sputter along.
Two major IPOs this week. DoorDash tomorrow down here on the floor of the stock exchange. Airbnb on Thursday up at the NASDAQ. What does that do for investor sentiment?
You know, I think this is the investor sentiment is really starting to pick up. With you're seeing more IPOs, you'll see transactions happening in regards to buyouts and mergers over the next 12 months. We're still not quite to a euphoric stage in the market, not even close in my opinion. But as more and more IPOs come in and you see speculative investors jump in, maybe in the second half of next year, maybe the time where I get a little bit more cautious. But right now, I think there's still a tremendous amount of upside because there really is not as much optimism in regards to the equity markets when you look at the current cash positions on the sidelines. And that's very bullish, in my opinion.
So taking into account that you think the cyclical names, basically economy plays, are going to be the ones to rally from here, how do you look at these IPOs, or these IPOs that you would want to invest in, these large tech, high growth, high potential growth companies?
For my client base and me personally, no. To me, a lot of these IPOs are just too speculative. A lot of times you'll see them run up real quick the first couple trading days, and then you'll see a big drop. So for me, I'm going to look at businesses that I feel like 12 months out, I can project pretty good growth and still get, in my opinion, some strong double-digit growth if we get the snapback economically from the consumer that we're expecting next year.
And in terms of the consumer, we've seen consumer spending. Yes, it's picked up. Of course, we're still seeing a recovery underway. But do you agree with some of these economists, Eddie, who warn that in the first quarter we could actually see flat to negative growth because of the virus, because of these stay-at-home orders that are threatened to be in place and already in place in places like California?
Yes, I mean, that wouldn't surprise us in regards to that. But I think on the flip side, when you take a look at the amount of families that really have been stuck at home, you're looking at the savings rates for these families have hit record proportions. And so that's why we feel like the pent-up demand is going to really drive tremendous spending in the second half of next year, because this money that these consumers have saved, they're going to look to deploy it and travel and do the things that they have not been able to do this year. And hopefully we get closer to life back to normal as we get closer to year end next year.
I guess, what does back to normal look like? What's your expectation in terms of the fundamental ways that some of these businesses have changed? Does that factor into your market decisions at all?
It does. Look, business, I think, has changed forever for a certain percentage, but I am not one in the camp that doesn't think that things are going to go back to normal, in the sense that people are going to want to go back to their office and be with their fellow teammates. People are going to want to travel. People are going to want to go out to dinner. They will feel safe again if these vaccines prove to work as the trials are saying that they're going to, and as long as people are willing to take that vaccine. So I'm not in the camp that life is never going to go back to normal again. Yes, there's going to be some permanent changes like the Zooms of the world, but I think for the most part, we're going to be 80% back to normal overall when we look 2 years out from today.
All right, Eddie Gabor, co-owner at Key Advisors Group. Thank you, Eddie, for joining us this morning.